as well. Today morning, both those banks are opening with good gains. Let's see if they're able to retain them. CSB is opening with 5%. I mean, that's like fantastic. Kotak Mahindra has been a good performer for the past couple of days. But let's see, whether the market is backing it all the way. It's possible that they have put some of their unsecured loan problems behind them, and that's why the market is cheered. That brings us to the market opening. It is opening for the second day in the green. The question will be whether it can retain, and it is again the auto stocks that are helping. Tata Motors, it was kind of a flat performance when you looked at the quarterly performance, but the market is very happy with the Tata Motors stock. Looks like it's about 1.4% higher. Kotak Mahindra is still the leader of the pack with a 2% gain. Bajaj Finance, Maruti, Suzuki, Shriram Finance. So everything auto or auto lenders seem to be doing well. And then you have Grasim, Bajaj Finserv, Coal India, all of them up with minor gains, about 0.5 or thereabouts. The Sensex and the Nifty are rapidly losing the strength of their gain. It's still up, but about 0.1, 0.2%. Not an emphatic gain. But Bank Nifty clearly is the winner of the pack, with the Kotak Mahindra Bank bringing in a lot of strength, up 2.5% now. What's not doing well for the second day in a row? Bajaj Auto is in the red. Market clearly a little shocked by the lower two-wheeler sales that they reported for the month of December. Wipro, I think Rima explained in detail, the stock has gotten a bit of down rating. HDFC Bank not doing anything, and that's hurting the Bank Nifty as well as the Nifty. Among other stocks, Adani Enterprise and Adani Ports also in the red, but minor red, and the Sensex and the Nifty up 0.25%. Mid caps?
Just one more stock. Bajaj Finance has opened, I think, in the green because Citi has opened a 90-day catalyst watch even on Bajaj Finance, along with Kotak Mahindra Bank. And that's one of the big movers in the large cap space with a gain of about 1.25%. So watch for, Bajaj Finance. Now, moving on to the mid-cap action. You've got CSB Bank, as pre-open suggested, 5% higher, very strong deposit growth. South Indian Bank also up in the green, that's up nearly about 2%. Ashok Leyland's total sales went up by 5% in the month of December, ahead of street expectation, and that is getting rewarded. We should pull up United Spirits, Jubilant FoodWorks. These were stocks where there was momentum on the way up in yesterday's trading session, just trying to see if there is any follow-through. Outside of that, you've got an EPAC Durables, a Unimec, one of the recent listings that continues to shine quite bright. KRBL, Tanla Platforms, which on large volumes rallied close to about 12% yesterday, continues to see buying. On the way down, softness seen in REITs. SJVN, one of the big movers of yesterday. Taj GVK is retreating a bit. You've got Nippon Life India under pressure, 1.5% down. There is some negative news on the mutual fund side, allegations of quid pro quo for holding the Yes Bank 81 bonds. So Nippon Life is under pressure. And Petronet LNG, here Citi has opened a 90-day negative watch. So Petronet LNG on the back foot.
Well, that's right. From the broader markets, a few stocks that deserve special mention. You have Jaycorp. That one's losing big time on very, very large volumes. So that's down close to around 5% in today's trading session. Sagility as well, that's the other one that's coming for some profit taking. You have SJVN that yesterday did well. Well, that as well is a little bit lower as we speak. What's doing well? You have ITI is moving actually on rather large volumes. So that one deserves special mention. Ola as well up only around 1%, but moving on rather large volumes. So that's why just pointing that out. Headline index, well, no worries. We're at around 23,805. Yesterday's high was around 23,825. So you'd like to get past yesterday's high to see whether or not there could be some more follow through. But it's a decent looking screen. Volumes though on the lower side because it's just the start of the new year.
I'll give an arm and a leg if someone can explain to me what's happening in ITI. I mean, it's just like wild moves. Why don't we pull up a 1 year of ITI? You just look at the last 3 months. I mean, it's like crazy moves, sometimes 14, 15%. Today, of course, it seems a more civilized move of 1.2 or at least not an eye-popping move. But ITI's 1 year or 3 month chart will tell you that several days it just gives you this double-digit moves. And you're not able to explain why that's happening. Can we get the chart going, please? That'll give a better idea. See, as you can see, suddenly you have this December and November and December, big moves coming in that stock. Tanla Platform is another one that did well yesterday as well, Rima, remember?
Yes.
And today another 4% up on that stock, or 3.8 as we speak. There could be some news afoot over here as well. So Jubilant Foodworks and Tanla definitely is something you have to keep, because it was going down with lower lows and lower highs. And now suddenly in the last couple of days, we have seen this smart jump. I don't know what is afoot at Tanla, but worth keeping on your radar, especially if you're a trader. But we now want some investment talk, and we have our market master joining us. Nimesh Chandan, the Chief Investment Officer at Bajaj Finserv AMC, has joined us. Nimesh, good morning. Thank you very much indeed for joining us. Wish you a very happy 2025, a prosperous one ahead. Start by telling us what should stock investors be prepared for. We got that, say, 8-9% gain last year at the index Nifty level, and a good 24 to 29% on mid caps and small caps. What's the overall expectation in 25?
Good morning, Lata. Happy New Year to you too and your team and the viewers. 2025 will likely be a year of two halves, where you see a different market in the first 6 months and then a completely different scene in the next 6. The first 6 months are a bit tough. There will be some uncertainty, some downgrades coming, political uncertainty, tariff wars, those kinds of probably negative or uncertainty causing news flows, which typically bulls don't like. So markets likely to be volatile in the first half. However, issues like slowdown in consumption or say the currency movements, I think they should stabilize by the second half, and we should have a better second half for 2025. Much of the domestic problems can be addressed of any slowdown that has occurred in the last half of 2024. I think those can be addressed, and hence I'm optimistic for the year, but a little worried for the initial few months.
Nimesh, hi, good morning. Rima here, and Happy New Year. I remember our last conversation where you had said that you're moving away from many of these domestic capex, manufacturing related themes, and you are taking a contra bet. And pharma was one, I think specialized chemicals and even consumption. Now, pharma has done brilliantly. It was the best sectoral gainer in 2024. What is the outlook now, first sectorally going into 2025? How is your portfolio constructed?
Hello, Rima. Nice talking to you. I'm even more bullish on pharma and healthcare from here. So this is one sector that gives you a good diversification away from worrying about economic cycles, interest rates, geopolitics. So this is a good safe haven. I would say this is a defensive plus growth sector. There are many triggers here in terms of Biosecure Act helping the CDMO or CRAMS players. There are many many patented drugs which are going to go generic, and which provides a good opportunity for generic players in India. And the domestic pharma market anyway is a good steady growth. So hospitals, pharmaceuticals, diagnostics, they will continue their steady growth. So this is a very beautiful safe haven and plus growth sector to be in. Consumption, I expect a recovery in the second half of the year, though I think this number, the Q3 numbers, should be better than Q2, and I believe Q4 will be better than Q3. We've seen good pickup in rural demand. Kharif harvest has been good. Rabi sowing has been good. So we are getting positive news from the rural side. Maybe urban side is still a bit slow, still a bit K-shaped recovery there. So second half likely to be better for consumption. Specialty chemicals, each player actually has done its own bit. So we had certain companies in dyes and pigments which became multi-baggers last year for us. Some were disappointing because midway we saw more dumping from China or more price pressure on their set of specialty chemicals. So those were a bit disappointing for us for the year. But consumption and healthcare likely to be the areas to be in 25.
Okay. Consumption, are you referring to mass consumption, Nimesh? Or would you go with the upper part of the K, as it were, you know, the hotels, airlines, that kind of consumption, discretionary?
sectors like consumption and healthcare have a long way to go. However, the runway looks a little smooth for healthcare right now. Consumption, the end goal, or like the way we are going towards a $5,000 per capita GDP, those news are positive. It's just that we are going through some rough patch. This is a time actually to start picking good companies, because these are good companies with good quality management, good brands, but going through a short-term rough patch.
Okay. So are you saying you will buy the mass consumption also? I mean, the levers, Godrej, the guy who gave us a bit of a scare, Daburs, you mean the mass consumption as well as the upper level, you know, the Blue Stars, the probably Trents, that kind as well. You mean both sides?
There are brilliant opportunities from daily groceries and FMCGs to quick commerce. So there are opportunities across this sector.
Hi, Nimesh. Good morning. Good to see you in. Nigel on this side. Nimesh, let's get a couple of factors out of the way. You have nicely, split up the year into two halves. So for the year, what kind of returns should we expect? Mid-single digit, high single digit returns, or could it be a bit of a down year for the year on the whole, 2025? And also last year, what did very well was the broader markets. Do you think this year it's going to be a reverse and the large cap names, in fact, will do relatively better?
Hi, Nigel. I'm leaning towards that. I'm like just about to call this year like 2018, where you actually see large caps doing very well compared to mid caps and small caps. That is where the valuations are attractive, and I think the growth is underpriced. Plus, the kind of selling you saw from foreign investors, I think the large caps have taken, borne the brunt of that selling, most of that selling. So I think next year, when things stabilize a bit in terms of global uncertainty, I think large caps should bounce back faster. There are brilliant companies within large caps, these top 100 companies, which have good growth, good quality, good return ratios, good cash flows. So it's a good time to pick actually large caps. So I'm tempted to almost say that this will be like 2018, where you see large caps doing much better than mid caps and small caps.
Okay, all right. Nimish, let's talk about a couple of sectors there where it has an industry tailwind. The EMS space, we had, I think, briefly discussed about this as well sometime in 2024. That's got an industry tailwind, but the problem is everything is going to come at a very healthy price. What's your view on this space?
So markets have got excited about a few themes in the last 2 years, and EMS is one of them. And we've seen a lot of new listings also coming in the past couple of years in this area. I think valuations are high here. So that's what even making me a bit uncomfortable. It's not that companies will see lesser growth than what anticipated. The runway for them is also huge. But valuations, again, will reduce your compounding in these areas. So right now, I would be worried about valuations here.
Okay. You're underweight IT. Can you tell us the reason? Because IT has been doing well. There is hope that, the US economy continues to remain strong. Rupee is a tailwind. And also, what is the call on financials?
At which part of financials?
In IT, actually, we've reduced our underweight, but here the underweight that we have in some of our broader-based funds is mainly mid-caps and small caps. We are overweight on a couple of large-cap names, but we are underweight on mid-caps and small caps purely because of valuation. Next year will be good for IT, but I think much of it is already priced in. And if there is any slight negative in terms of higher visa costs or maybe some restrictions there, that would impact these smaller players and mid-sized players a little more. So optimist about IT, but more towards larger players compared to, again, here the smaller players there. In terms of financials, we are bullish on certain banks. Mainly private banks is where we are positioned. Credit growth is a bit of an issue for some time. I think we will see lower number for a few months still going on there. Asset quality, RBI somehow mentioned recently in the report that they are going to see a slightly worsening asset quality. It doesn't bother me much because we were at pristine kind of asset quality and we're moving slightly higher. That's part of the cycle, so we have to take that. Selective in financials, avoiding MFIs for now because they're still going to see some kind of regulatory changes coming in, and that could put pressure on their business and their margins.
That's a fair assessment, Nimesh. Thank you very much indeed for speaking about so many sectors and giving us a perspective for how the year might be. Difficult first half. The important point is how difficult can the January 20th swearing in make it. Thank you very much for joining us. Okay, Info Edge is the next management on the show to discuss hiring trends in 2025 at a macro level and about the company itself. We are joined by Hitesh Oberoi, Managing Director and CEO at Info Edge. Good morning, Hitesh. Thank you very much indeed for joining us. And first up, on behalf of all my co-anchors and everyone at CNBC, a very happy 2025 to you.
To you and all your viewers as well. Very happy New Year.
Thanks, Hitesh. Okay, the first question really is that we're getting news that there has been good campus placements. There was a newspaper article saying that several of the engineering companies, BITS Pilanis, the Vellore Institute, all of them have seen a substantial increase in the top line offerings. Give us an idea about how placements have been. What's the Naukri Job Index telling you?
After a after a poor 5 or 6 quarters, IT hiring is now looking up once again. Our index is also reflecting that. GCCs are hiring in big numbers. Startups are looking to hire once again. AI professionals are in great demand. So data scientists, data engineers, machine learning engineers, their sort of demand is moving up. Attrition rates are going up in companies, and increments are also likely to be higher than last year. So after a dull 5 or 6 quarters for IT hiring, things are slowly getting back on track. It's not back to the days after COVID when, demand was on a tear, but it's getting back to normal once again.
In CNBC-TV18, we have forgotten the spelling of increment, but that's a separate matter. Can you tell us the salary curve? I mean, when you say that AI professionals, IT hiring, is it the 4 lakh category where you're seeing a good hiring? Or is it just these small peaks of extraordinary AI professionals? Give us an idea of volume and value.
Yeah. No, you're right. I mean, right now, demand is looking up for high quality professionals, or what we call premium professionals, or engineers from good institutions. Their salary bands are, of course, much higher than what regular IT services companies in India pay. So, the traditional large IT services companies, their starting salaries are more in the 4 to 5 lakh range. But premium talent in India gets paid more than 8 to 10 lakhs per annum as starting salary. And these people are currently more in demand, but that's how it starts. So, first the demand for premium talent picks up, and then it spreads to, other talent. The good news is that demand is picking up, and GCCs are hiring in large numbers. Even the big tech companies in India have started hiring once again. Specialized IT services companies are hiring in large numbers. So maybe not the big ones as yet, but the mid-sized ones are beginning to hire. And, attrition rates are slowly moving up. So this is how it starts, and hopefully it'll sort of spread to all companies and all kinds of professionals over time.
We should pull up one chart which shows the Naukri revenues over the last 3.5 years. And you can see the boom that we had post-COVID. In FY22, Naukri revenues were up 45%. In FY23, it was up 48%. Though that was the year of the Great Resignation, everyone was hiring in big numbers. And then, as Hitesh said, things slowed down for 5 to 6 quarters. FY24 revenues were just 7.5%. And even in the first half of the year, Naukri revenues are up 7%. But the green shoots are visible in billing growth, which is a precursor to revenue. So Hitesh, tell us, in Q2, we saw double-digit billing growth. Has that continued in Q3? And even for revenues, do you think we can get back to at least a 15% kind of revenue growth rate for Naukri in FY26?
The Q3 numbers are not out as yet, but you're absolutely right. Things started looking up in Q2. So billing growth was back in the teens in Q2. See, the non-IT part of the business, which is about half our business, continues to do well. So that part of the business was actually growing in the mid-teens already. It's just that IT companies were not hiring, and therefore growth in IT hiring or IT revenue growth was flattish to negative actually for a few quarters in between. So as a result, we were ending up in the 7 to 8% range as a company as a whole. But now IT hiring is back to growing in double digits or close to double digits, and the non-IT hiring piece is still sort of doing okay. So yes, we should target growth in the teens going forward.
This would be second half of the year, or we're talking about FY26 getting back to mid-teens growth?
No, we would. No, last quarter was good for us. So last quarter billing growth was in the teens, and hopefully it'll get better from here on if things go well. I mean, what I'm actually more worried about right now is not so much IT hiring, but non-IT hiring, because that's more indexed to the domestic economy. So I hope that continues to grow.
But are there
like
any
it was
signs of
earlier.
sluggishness in the non-IT hiring, which is
Has it gotten worse?
No, it's still okay. I mean, of course, there are differences across sectors, but on the whole, it's okay. I mean, certain sectors are of course doing better than others.
Okay, give us an idea in terms of bottom of the pyramid. Say that, like I asked you, 3 lakh, 4 lakh hiring. If you looked at BFSI, IT, all of them put together, are entrant hiring better, say, in the last quarter than it was same quarter last year?
Yes, no, certainly things are beginning to look up for entry-level hiring across all levels.
Okay.
And, so my sense is it's only a matter of time before things get back on track. Of course, the economy has to continue to do well. But what had also happened is that all these IT companies had overhired, and they had built up a big bench, and the utilization rates had fallen to 73-74% levels. Because they did not hire for a long time, they did not replace the people who were leaving, they deferred joining dates of new hires. Their utilization rates are back to pre-COVID levels. Their utilization rates are back to 84, 85, 86% levels. Now, at least, even if they have to stay at the same number, at the same headcount, they have to replace the people who are leaving. So replacement hiring has started, even in the big IT services companies. Okay. So that will create demand. And then what will also start to happen is that a lot of people will start moving to GCCs, and some of these hires will be from IT services companies.
Got it.
And then that will sort of, the attrition cycle will start as a result. So I think if like I said, this is how it starts. So it's the big companies and the companies that are doing well and the GCCs who start hiring first. And then it spreads to other sectors.
Okay. Got that. No, we got that about IT. I got that about IT and GCC. Hitesh, what about, as you said, the domestic facing sector like BFSI? Is there at least a secular upward? Is the delta higher? Because, there's this big fear that AI is probably, making them use their current talent in terms of different jobs because some jobs are getting done by chatbots. Is there a secular movement of more hire in the domestic facing sectors, and also your investments in AI?
Yes.
Is that going to give you better margins or higher costs in the first place?
Let me answer your first question first. What we are seeing is higher demand in actually tier 2 cities and tier 3 cities. So some of the smaller towns are doing a lot better than they were earlier. And they're mostly hire non-IT professionals. So as companies grow, as companies spread, demand for talent is picking up in places like Jaipur, Udaipur, the small towns in the south, and so on. So that should drive sort of demand or for jobs at the entry level or the 3 to 5, 6 lakh category. So I think that should sustain. The economy has to continue to do well. See, that is more important. The economy has to continue to do. We should continue to grow at least 6% per annum. Because in the past, we've always seen that whenever India starts growing at 6-7% per annum, we run out of talent actually very quickly, right? Of course, we may be a little more productive than earlier. AI will have an impact. But in general, whenever India starts growing at 6-7% per annum, and if this sustains for 2 or 3 years, we run out of talent. Up till now, what was happening was there was an overhang post-COVID because most people didn't get employed during COVID. For a while, there was no hiring. And that workforce is getting absorbed. But increasingly, if India continues to grow at this rate, people will be hard to get. There is an employability issue. There is a skill issue in India as we speak. As far as our AI investments go, we are very bullish on AI. We have ramped up our AI hiring. Our AI team has grown from 15 people to 100 people over the last 2-3 years. This is the only area where we were actually hiring aggressively, even when our business was slow. And we are seeing great results as well. So we are using AI to become more productive ourselves. We are using AI to launch new features to make our existing algorithms better. And we will soon be working on building new products using AI, which will create new revenue pools for us in the future. So we are, I think AI, and especially generative AI, traditional AI has been around for a while, but generative AI will go mainstream this year, in 2025.
So Hitesh, give us 3 actionable priorities for 2025. What would they be? Because you have plans to expand more into tier 2, tier 3. So tell us, you've got a lot of cash as always. The company's spewing cash. So what would be the 3 focus areas for you?
So one, of course, like I said, we will continue to ramp up our AI investment, and especially in the core Naukri business. And that will help the Naukri business grow faster over time. Second, we are working on our blue collar job board. We started monetizing Job Hai, 2 quarters back, and we're getting decent results. So we will ramp up our investment in the blue collar job board, Job Hai, next year. And thirdly, 99 Acres and Jeevan Sathi, we worked very hard on these two businesses. They are now almost breaking even, and we want to try and make them profitable next year, and of course keep growing them rapidly as well. So from an operating standpoint, these would be our priorities. Of course, the financial investment program will continue.
Very quickly, any big IPO encashing from you?
No, see, we've made over 100 investments. A lot of these companies are doing well. Some will definitely go public in the next 1 or 2 years.
Okay.
Which ones are close to going public or large enough size for you right now?
See, even Zomato and Policybazaar were tiny little 3 or 4 years ago, and we invested in them almost 16 years back. So it's very difficult to say how things will play out.
But which ones have achieved a decent scale? Because you have 100, so we can't track all 100.
Yeah, there are some which are looking really good and which will go public in the next 12 to 18 months.
Okay. Thanks a lot, Hitesh. We're trying to squeeze as much as we can, but have a great 2025. And if it is a good one, then we are going to see a lot of IPO investors getting rich, you included. Thank you very much for joining us.
Thank you.
Okay, that's the word coming in for InfoEdge. That looks like an optimistic conversation with hiring beginning to pick up. We have to take a quick break. On that note, market still in the green. We're going to come back and track the auto numbers. We will be joined by Rakesh Sharma of Bajaj Auto.
Welcome back. Well, the market's at the high point of the day, and the good news is on day 2 of this calendar year, we're higher than what we saw on day 1. So the highs of yesterday has got breached, which is good news. We're still in a bit of a range, but good to see a bit of an up move. Volumes, though, still much lower than what we normally see. But let's get to our next corporate, Bajaj Auto. They reported actually a mixed trend. Exports continue to do well. However, the domestic volumes were a little bit lower than what the street was working with. To understand how the demand trends are shaping up, we have with us Mr. Rakesh Sharma, Executive Director of Bajaj Auto. Hi, Mr. Sharma. Good morning and always good to see you in. Wishing you, your family, the entire team a very, very happy new year and all the best for 2025. Well, let's get to demand first, particularly the domestic demand. There's a degrowth that we are seeing in the domestic volumes. Could you explain this to us? Was it a seasonal, year-end factor? Or is demand a little bit softer than what you expected?
Thank you very much, Nigel, and a very happy new year to all of you as well. I hope you have a great year at CNBC, and it's always a pleasure to engage with you all. So from our point of view, Nigel, the December was as we had expected. There are very few degrees of movement in December for a couple of reasons. Primarily, it follows the season. And as you know, the season was pretty good. So there is some advancement of sales and purchase decisions which occurs. And therefore, December is down. Secondly, there is an element of this model year change and people feel that, okay, might as well wait till January and get the new model. Though people OEs try to offset this with some year-end discounts, etc. But because of that, December is always low, and it comes in. There's not much of action there, and so therefore it came in as expected. We take the opportunity in December to correct stocks which have, which we continuously build till the season and in the season, and then the season continues till almost middle of November and then December. So the negative which you're seeing in our sales is because of stock correction to some extent.
Mr. Sharma, that point is taken, but it is Vahan registration itself indicating a drop of 14%. Now that is a bit worrying because we are comparing season to season. We're not comparing December to November, we're comparing December to the other December. And if the registration itself is low, it's not just a question of inventory correction. It looks like demand has cooled off. Does it worry you?
No, that's what I said. Demand does cool off. And, we would be reading too much in a month where, which is almost like, July and December are almost dead months. To pick up data from just those months and try to extrapolate that would be not correct. The year-to-date growth in the industry is about 8%. And I'm talking here of motorcycles, not two-wheelers, because two-wheelers also includes scooters, and we track motorcycles. So the year-to-date growth is 8%. If I take the full season, which is, which starts actually in September, in the sense that there is a low period in September, and then I compare it with like for like, there has been an 8% growth in what we call September, October, November kind of a period. And going forward, we expect that Q4, the motorcycle industry should be in, the 6 to 8% kind of a zone. And in that, those trends which I've been talking about, the upper half of the industry growing faster than the bottom half, that we have seen in Q1, Q2, H1, the full season, and we expect that to continue in Q4 as well.
Morning. So let's talk about exports. That's been the bright spot for you. What do you think would be the monthly run rate, at least for the next 3 months now, January, February and March? And what are the trends geographically?
So exports has been in a steady recovery path. Africa, I would say, is still is recovering. Currencies have become stable, but I would say we need to watch it. Asia, Middle East, and LATAM are doing pretty well, particularly LATAM. We expect that, year on year, we have been growing at about 20%. Q2 onwards, I think, Q2, Q3. We expect to clock a similar growth rate over last year. So that's the outlook. But the bright spot really is in exports, Latin America, both from an industry point of view and from our point of view. You see, we've in our sort of focus on Africa, we have not taken into account what has unfolded in Latin America through a combination of the LATAM markets doing well and Africa going down. Today, LATAM is twice the size of Africa, just in volumetric terms. And if I look at simply even our average selling prices, which are twice that of what is there in Africa, you can see that the potential of Latin America is almost at this point of time 3 to 4 times that of Latin America. And we are rather delighted by our performance in Latin America. And there is plenty of headroom to grow in places like Mexico and Brazil, Colombia, where we have been growing much faster than the industry. And all our new product introductions, which are lined up now in Latin America, make us feel very optimistic about it. So I would sort of say that, besides the steady 20% growth, there is a lot to be happy about looking at Latin America, both from the opportunity point of view and our preparedness over there.
Okay, all right, Mr. Sharma, I want a couple of details with regard to both your markets. On the domestic front, the CNG model was launched. What are the sales volumes numbers, if you could tell us in November as well as December, on a month-wise basis? And also, since we're talking about exports, what about Nigeria? You told us December is seasonally weak. Last month, I think you did around 36,000 units. For December, what was it?
Yeah. So Nigeria, it starts to cool off from around Christmas time when people go into holidays. But we are pretty delighted by the performance in December. Two-wheelers turned in another 36,000 unit month, and that following on the 36,000 November, Nigel, as you pointed out, is confidence building about the immediate future. But, having said that, I must point out that this was the peak season, and let's see how January, February, March hold out. But I would expect that to be a tad lower than the seasonal peak, which we saw in November and December. But of course, I think over last year, it would be a good growth. Freedom, as was the case with the motorcycles, with the industry itself, the retail industry itself shrinking, its volumes declined in retail terms in December over November. So we are now clocking about in November and December, about 6 to 8,000 units, 6 to 9,000 units of Freedom 125.
Okay.
As you know, we have introduced a lower priced variant at the entry level, and that has shown us rich promise. So we are again, going to be pushing that in January.
Got that. Rakesh, pleasure speaking with you. Thank you very much for joining us. Once again, a great 2025 to you. Okay, we have to go to the other big auto major, Maruti Suzuki. They have registered a 30% increase in sales in the month of December. My colleague Parikshit spoke to Partho Banerjee, the senior ED marketing and sales at Maruti Suzuki, began by asking about the key markets that contributed to the sales growth in December. He also spoke about the order book trends, probable headwinds. Listen in.
Coming to the month of December, I would like to share that this has been our record sales month. We did more than 2.52 lakhs retail sales in the month of December, highest ever in the history of Maruti. And if we see the calendar year also, the 2024, we have done the all-time high retailing 17 lakh 90,000. So setting new records for the Maruti in the history. Now coming to the month of December, I think all our cylinders fired. Be it the hatch segment, be it the MPV, be it the SUV, van segment, every segment fired. Just to give you a perspective, our Swift, Baleno, Wagonars, the retail was close to 29-30,000.
All right, yeah. So we've seen actually strong numbers across the board. How does the hatchback market look? Because the entry-level market had been a little stressed. The cost of even entry-level cars had been going up because of regulatory issues. Do you see the market shrinking? And in the stress that the market is in currently, how do you think the company has performed?
Parikshit, you rightly mentioned it's an affordability issue actually. The monthly household income MHI is not going up in line with the increase in the price of the vehicle. But nevertheless, being the market leader, our endeavor has been that how we can make more and more people upgrade from a two-wheeler to four-wheeler and provide him the joy of mobility by offering him very innovative finance products, doing some sort of new limited editions. The Dream Series editions has been the one which we are doing for the last 3-4 months. In the month of October also, we saw a very good traction. And the top of it, I think the rural market is also playing a major role. In the month of December also, we saw that the rural market has responded very well.
Between rural versus urban, what's the share like?
Rural is around 48% right now and urban is 52% for us, Parikshit.
Okay. And in terms of states contributing to this increase in sales, where did the majority of sales actually come from as per geographies?
Parikshit, it is now across the board. The month of December, all our regions performed very well. It was an all-round performance. It was a clinical sort of a thing, I would say.
All right. Now, if we were to look at the order book currently, what is Maruti Suzuki's order book looking like?
If you ask me, we are the market leaders present across all the segments in all form factors, be it the SUV, be it the MPV. In every segment, we are playing a very major role. Coming to the business per se, we have done the all-time high retails. Our dealer network stock, just to share with you, is in single digit, just 9 days. So I think the January 2025 onwards, we are ready to start the new year.
Right. Number of bookings that you may be sitting on?
Oh, it's more than 2 lakhs.
Okay. Looking at the kind of headwinds, because 2025 has been said to be a very volatile year geopolitically. We're going to see Donald Trump take over in the United States. On the whole, for the auto industry, how do you see 2025 as a year? What are the challenges on the horizon?
Parikshit, I feel automobile business is a combination of many complex factors, actually. But we being the market leader, our endeavor always has been that how we can be able to serve our customers, make our cars more and more affordable, how we be able to reach closer to the customer. Just to give you a perspective, like in the case of the Nexa channel, in the last 4 months, we have been able to reach to 100 new tier 2, tier 3 cities, typically the Bharat which we talk about. That's the thought process which we have. How we can be more and more be accessible to our customers, how we can make their life comfortable. That is the endeavor of the market leader.
In terms of your expansion plans, what is the kind of expansion plan that you have for 2025 for this calendar year, sir?
First of all, in the Bharat Mobility Show, I think through your channel, I would like to extend my invite to all the viewers that from 17 January onwards, there is going to be the Bharat Mobility Show at New Delhi. And you are all invited to visit the Maruti exhibition, in which we are not going to showcase only the product, but we are going to showcase the overall ecosystem, what we are going to provide for the electric vehicle. I would like to, Parikshit, give a metaphor. Actually, when Maruti started 40 years back, we didn't start it with just selling the product. We created the ecosystem, be the infrastructure part of it. So again, we feel that when we are going to venture into the new segment EV, we are going to create the ecosystem for it. And we will be sharing the same with our viewers and all our customers who are going to be visiting us.
Right. If you could give us a little bit of more flavors in terms of how many electric vehicles could be showcased when you speak about EV ecosystem? Will Maruti somehow provide charging options to consumers or give out charging solutions on a nationwide scale, which supports not only Maruti buyers but other automobile buyers as well?
Parikshit, I think if I share everything right now, then the viewers will not be coming to see the exhibition. So let's keep it something for them also to come and see. And surely we will be, at the time of the Bharat Mobility Show, I will be sharing more in detail what are our plans, what we are going to do. But my request to all viewers is this: please come, visit and understand that what Maruti is going to do.
All right. Any visibility that you can give us on the launch of the electric Vitara? Will it happen in July, June or July?
We are going to launch it in the Bharat Mobility Show.
Okay. And the commercial rollout, sir?
It will be happening in due course of time.
Okay. Now, in terms of the future push from Maruti Suzuki, in terms of the product line, what's going to be the effort from your direction, sir, in order to maintain your market share going forward as the market gets more and more complicated, more SUVs get launched, more electric cars come into the market?
Parikshit, we being the market leader, we feel we need to be technologically agnostic. So we are going to be present across all the technologies, be the EV, be the strong hybrids, be the CNG, biogas, flex fuel. We are going to present across all. Also, we feel we need to be present across all the segments, all the form factors. And we will leave it to our customers to decide which technology, which form factor they would like to go for.
Okay. My final set of questions, sir. When it comes to the Kharkhoda plant, what is the current status? By when do you think it will now be operational?
It's going as per plan, actually, Parikshit.
Okay. And finally, sir, any big trends for the auto sector that you see in this calendar year? We're just starting off the year right now. Everyone is going to try and fire all cylinders. What is the big picture that you can give us for the auto industry in terms of the headwinds and the challenges?
I think what we are seeing, the trend from the Desire and the Swift is this, that more and more consumers are looking for value propositions, be it in terms of the features, because ultimately today Indian customer is ready to pay a price if he gets the right features.
Interesting. Big pipeline with regard to new launches as well as what Maruti has lined up. For the time being, we slip into a short break on news that the Nifty is at the high point of the day. We're up 100 points. But when we come back from the break, Manisha Gupta will be focusing on the commodity space. Don't go anywhere.
Welcome back. While the frontline indices have recovered, the mid-cap index is still absolutely flat. So there is no positivity visible there. And under pressure are Petronet LNG, so that's down close to about 6%. And some banking names, Union Bank, Bank of Baroda, so PSU banks with the back foot, and Paytm is seeing some profit booking. But we have with us Mitesh now with us for a few 10 a.m. calls. Mitesh.
I think, the indices still haven't shown any significant improvement, but I think the Nifty is now closer to this 23,859 zone. So if we can see a break above that, and today the IT stocks are participating well, that could be an interesting thing to watch out for. The other, strength which I think could come is from the auto sector. Disclaimer: we have some positions over there in Maruti and M&M, but I think that's looking good as well. So for the timing, I recommend a buy on Tata Motors with a stop at 740. For targets of around 775 to begin with, and then we'll look at even higher levels from there. And the other stock which is on my buying list, that's Adani Enterprises, which I would recommend buying with a stop just below levels of 2,500 and look for targets around 2,650.
Got that. IT is clearly the winner today. IT index is up 1%. Infosys is higher. HCL Tech is higher. For Infosys, many analysts believe the company will go ahead and up the full year revenue guidance forecast, and the rupee tailwind depreciation is, of course, a tailwind. But let's talk about commodities now. Manisha is standing by. Manisha.
Well, thank you for that. I want to start with crude oil prices because as we have started new year and most of the international players are coming back into the market, the one thing that they're buying quite strongly seems to be the crude oil prices. Well, we have seen prices gain up by a percentage point in the overnight markets. Remember, crude oil prices are also gaining because the US crude inventories have declined by 1.4 million barrels. This is going to be the third straight week that you are looking at inventories on a decline there. Also, crude oil prices did close 2024 on a weaker note, down by 3%, and 2024 was a second straight year that you saw declines come in for crude. So there is some opportunity buying as well happening. The market's also taking support from the World Bank report, which has raised a forecast for economic growth for China for 2024 and the upcoming year 2025 as well. China also has pledged to issue special treasury bonds worth a record 3 trillion yuan. That is expected to support the crude demand going forward. Markets also are looking at the EIA report, which has said that the demand growth forecast for 2024 was at 1.2 million barrels to 104.3. The markets are anticipating that you could be looking at a demand growth growing on that for 25. That is keeping the prices supportive as well. Now, when we come for 2025, well, there are a bit of a concerns, especially when it comes to supply side of it. The non-OPEC production is expected to drive 1.66 million barrels per day of a supply growth in 2025, while the demand is anticipated at 0.5 million. So that is where you have a surplus coming in. Apart from that, the OPEC and allies have continued to delay their increase in production, and that production is expected to come in the markets from April 2025. So you are looking at excess supplies for sure. And then when you look at the US markets, the production there is at near record highs. The net imports are expected to see a decline of 20%, lowest since 1971. So US is not going to need too much of Middle East crude oil either. And then the markets are looking at continued volatility from various sectors like geopolitical tensions. It also is going to be about risk tensions, US policies, Chinese demand. So there's just so much to watch out for. There's a lot of data coming into the street today as well. You have US jobless claims, Fed meeting minutes, and the US employment data. So this is the first set of economic numbers that we are seeing coming in from the international markets for 2025. And the street will definitely react to all of these numbers.
Thank you very much for that. Let's get to the big stock movers at 10 a.m. Upasana is here with Petronet LNG.
Well, Citi has given a sell rating on the stock with a target price of 310 per share, which is a downtick of nearly 10% from today's opening. Now, the brokerage says that recently PNGRB had called for a regulatory framework to bring regasification activity under its purview. It says that the regulator believes that this is crucial to ensure fair pricing, transparency, and efficient utilization of LNG import infrastructure. Now, regulator has called out Petronet LNG for profiting immensely at the cost of gas consumers, and Citi is of the view that the latest move clearly introduces a meaningful regulatory risk for the company. Together with increasing competition, Citi believes that this adds to the uncertainty on the stability of companies' historically strong pricing power. And further, the brokerage has gone down and opened a 90-day negative catalyst watch on the company. Hence, that's the reason the stock remains in focus today, reeling down in the trade today.
Thank you very much for that. But the Citi's 90-day positive catalyst has pushed up Bajaj Finance and Kotak Mahindra Bank. So these are the two big winners in the large cap space. Time for a short break. On the other side, in our special segment, Indianomics, Lata will connect with two economists and a foreign exchange bond expert to map how the rupee, cost of funds and GDP growth will shape up for India this year.
Hello and welcome to the first Indianomics edition of 2025, where we have done a special poll for you to map out how Indian macros may shape up. First up, the poll says the Indian rupee will slide to 86.25 by March 2025 and further to 87 by the year end. That's, of course, according to a poll of over a dozen economists and treasury heads. For the year end, the economists' forecasts are lie between 86.75 and 87.5. GDP growth is on an average seen at 6.4% for FY26, but the range is 6.3 to 6.5, while for FY26 next year, the growth is seen at 6.6%. The range again is 6.5 to 6.8. Finally, for inflation, the current year is seen averaging 4.8, which is basically the Reserve Bank's forecast. But for next year, the poll shows the CPI may average at 4.4. Well, that's the poll. For a more nuanced discussion on how the economy will pan out, what we may expect from the budget and monetary policies, I'm joined by B. Prasanna, the head Global Markets Group at ICICI Bank, Kaushik Das, Chief Economist at Deutsche Bank, and Upasana Bharadwaj, Chief Economist at Kotak Mahindra Bank. Gentlemen and Upasana, thank you very much indeed for joining me. Well, rupee is uppermost in the mind, Prasanna. So the first question is fired at you. You know, one thought when I did the poll at 86 quarter, and I did the poll late last year, around December 30th, it looked like 86 quarter by March end was okay. But the slide thereafter and the sharp rise in the dollar index to almost 108.3, do you think the weakness can be even more in the first half of the current year?
So, good morning, Lata, and good morning to my co-panelists and your viewers as well. So, I think slide is a very strong term, Lata. If you really look at the percentage depreciation of the rupee against the dollar, and especially when you compare it with various other currencies, it's much, much lesser than what some of the other currencies have experienced. So, while I do agree that the rates have depreciated a bit, you can call that the dollar index has actually appreciated substantially. It was just at 100.5 before the Trump trade started, sometime in September 30th or so. And after that, we have seen nearly 8.5% appreciation of the dollar, and hence depreciation of most of the other currencies. Rupee has performed relatively better than most of the other currencies. Having said that, what we do feel is that, unfortunately, we do feel that the dollar strength will possibly continue for at least a month more. And I think all of the fears of the Trump trade and the policies, whether it's on tariffs, corporate tax cuts, equity growth, inflation, as well as the fiscal deficit, all of that is getting factored in. Now it remains to be seen as how much of it is reality and how much of it is just fear. And accordingly, I think after the next 1 month plays out, the dollar will possibly either peak out and then react to the actual announcements by the president when he takes office.
Okay. No, I'm sorry if I gave you the impression that slide is a negative thing. On the contrary, I would think that we ought to be shoulder to shoulder with at least competing exporting countries, because already we, even before the Trump trade began, there were steel companies complaining to us that China is dumping, they are selling at below cost, with the renminbi depreciating already at 7.3. Okay, just tell me that. What are you all expecting in terms of renminbi depreciation? And therefore, should we be wanting and preparing for a cheaper rupee? Rupee has depreciated 3% in in 2024. Should it not be at least 3% in the current year as well?
Is that to me, Lata?
Yes, to you, Prasanna.
I think our house view is for yuan to depreciate to something like 7.5, and depending upon what kind of tariffs come, we take it forward from there. And on the INR bit, I kind of also agree with the kind of poll results that you've got, which is that we are into a depreciating scenario. RBI will step in to kind of, measure the volatility a little bit. But I think the sense that dollar INR goes higher, the rupee depreciates is a given. So I would say that around 86 to 86.5 by this fiscal year end, and December end maybe close to 87, 87.5, I think is something that even I would subscribe to.
Okay. Well, let me get the growth dynamics in, and then coming back to you for interest rates and the bond index and the bond levels. Upasana, you have only a 6.1% for the current year, a little lower than the range of my expectations for FY25. Why are you factoring such a low number? Are you worried about domestic consumption faltering?
Lata, yes, I think we are looking at most of the indicators and they are suggesting that consumption is likely to remain extremely weak, and private sector capex too is not picking up at the pace at which we have been, anticipating. It's a rolling expectation that we've been holding on to for the private capex. So none of the two private sector categories primarily are expected to hold up. At the same time, if I look at the center plus state spending, that too is not picking, especially on the capex side. It's still not picking up pace, the pace at which we were expecting. The third quarter has passed by and now we are left with the last quarter. What we need to keep in mind is the kind of excessive welfare schemes that the states have been announcing. And in order to meet their 3% overall targets, FRBM targets, they will have to compromise on spending somewhere else. And in that context, I think capex could still not be taking so much of a lead. So I guess somewhere all of this together, it's a more broad-based expectation apart from agriculture. We're looking at a reasonable slowdown across the board. At the same time, we need to keep in mind that last year, H2 was 8.2% average, and it is a very high base. So on that, we are looking at H2 of 6.2%. A little here and there, but broadly, yes, that is going to be there. Assuming that there are no changes to the number, of course, we might be seeing changes, but there, of course, I don't want to speculate there.
Yeah, fair point. Though, of course, the GVA number was lower, but yes, you have to contend with that 8.2% number. Let me come on that point to you, Kaushik. You are actually the optimist in our group. The poll we did, at 6.5, hardly any adherence to that number, except the Reserve Bank, which stands at 6.6. Where is that confidence stemming from? The auto sales numbers that we got for December were not very encouraging. GST at 7.3% higher seems to be indicating Q3 is not all that good. What's your sense?
Hi, Lata. First of all, Happy New Year, and
Thank you.
Happy New Year to your viewers as well. We knew that the second half of the fiscal year, there would be some pickup in growth. Also, we have built in the possibility that FY24 8.2% growth will probably be revised lower. So that will also give some, kind of support to the base. And all taken together, government spending, will increase more than the first half that we have seen. Already, we have seen some increase in momentum in October, December. Numbers could be, biased. The risk could be biased to the downside, but all taken together, I think we could come to 6.5% growth for FY25. But whether we are at 6.3, 6.5 for this year or next year, also we are at 6.5. The main point is we are going to be below the potential growth rate of the economy, which is at 7% or higher. And that's what we need to focus on. The numbers we can keep on quickly because it changes.
I agree. I completely take your point that, that is the larger question that both policymakers and citizens should be squabbling about. But I still want you to ask you whether there's a downward bias to your Q3 number. What is the Q3 GDP number? And having looked at what we've got, lead indicators, auto sales, GST numbers, etc., credit growth, are you likely to give a downward bias? What's the number? What's the bias?
So Q3, October, December, we have a forecast of 6.8% GDP growth. And I think RBI, if you've seen the latest monthly bulletin, they're also saying that currently the nowcasting is showing around 6.8% for October, December. Now, obviously, the quarter is not over yet. We'll get more data, and along with that, we'll make up our mind whether to reduce it. But as I told you, on February 28th, when we get the October-December GDP number, it'll come with a lot of revisions. So all these forecasts may not mean much. But I think we can go above 6.5% in October-December. Private consumption should pick up more, given what we have seen in October. The festival demand and government consumption on the margin would have picked up from the first half of the fiscal year. Kharif sowing has been good. So if you plug in all this together and, corporate earnings may not be as good as what we have seen in the past few quarters, but definitely better than July, September. That is the expectation. We should be above 6.5% growth in October, December. We have around 6.8. Whether it is downside bias, we have to decide by the end of the quarter when we get all the numbers.
No, I take your point that there's a lot of FMCG companies telling us that, rural recovery is good, and even tier 3, tier 4 cities are showing some spunk. But I don't know about the nowcast of the Reserve Bank. They said that even in, when they gave us the October bulletin. And 6.7 was their nowcast. We ended up with 5.4. So the nowcast perhaps does not have all the data. Anyway, let me do one rapid fire with all of you in terms of the February MPC action. Upasana, rate cut, February MPC?
Yes, but it's a close call. Yes.
Okay. Kaushik?
Yeah, we have a 25 basis points rate cut call.
Prasanna?
Yeah, it's a very close call, Lata, but I would go with a 25 basis point cut.
Okay, so 3-0 in terms of in favor of a cut. In any case, the MPC already was at 4.2 in terms of expecting the cut. But Prasanna, what will that do to bond yields? By the end of March 31, can bond yields, if repo is 6.25, do yields go down towards 6.5?
So I think, Lata, for bond markets, while we may all concur with a 25 basis point rate cut estimate right now, bond markets are obviously comprised of a lot of participants where half of them might not even believe in the rate cut theory at this point of time because it's a close call, like I said. I think the argument for a rate cut is predominantly from the fact that the growth needs a support and current account deficit is still not a problem, though BOP is a problem. So rates is not the way to, protect the currency. And like you said, you need to let the rupee depreciate. But having said all this, we really don't know what is the thinking in the minds of the RBI, with especially two critical members being new. I mean, the governor and, of course, the deputy governor, who would be new when the policy comes out. So from that perspective, market is still grappling with whether there is a rate cut or not. So I would presume that we would go with a range of something like 665 to 680 kind of a range till February. Of course, a lot of things ahead of February, what happens to Trump policy announcements, what happens to our own budget prior to the policy, and what happens to the Fed minutes, do they indicate something different? So a lot of things are there. So I would say 665 to 680, but if I have to go with the fact that we are on balance expecting a rate cut in February, I would say bond yields are headed towards 665 to 670 by end of March.
Okay, if there is a rate cut, 665, is that your call?
That's right.
Okay. Well, Kaushik, the noise that we have heard from North Block is clearly pressuring the Reserve Bank. I mean, the November report, which was announced on December, the monthly review, clearly seemed to blame Reserve Bank for the slowdown. There may be a lot of debates on both sides of that statement. But given that pressure, you still think there can be a close call on the rate cut in February?
Lata, let me make 2 points over here. Analytically, if you see a framework in the last 20 years, the different monetary easing cycles, the pause period between the end of a rate cut cycle, a rate hike cycle, and the start of a rate cut cycle, the highest gestation period has been 11 months in 2 episodes. So compared to the 11 months or a year gestation gap, this time we have waited for almost 2 years before the start of a rate cut cycle. So I would assume some part of the liquidity tightening as well as the rate hike and the long gestation gap, macroprudential norms have started taking effect on growth, and this is what we expected for FY25. So we are not surprised with growth having slowed down, and you're going towards 6.5% level, which is below potential. So I think the second point related to this is that monetary policy has to be forward-looking. If you look at the monthly bulletin that RBI has taken out in December, and if you look at the forecast that they have given for growth and inflation, you'll see that in October, December, and January, March, they're forecasting growth to be 6%. If you look a little forward ahead, and if you look at inflation, from July, September, they're saying inflation would be below 4%, 3.7, and then below 4% throughout. So if you know that monetary transmission works with some lag 2-3 quarters, then you have to start the rate cutting process now itself.
Yes.
So you can't delay that, and then you'll be further behind the curve. So I think that's why February and April 225 basis points rate cuts make a lot of sense, and then letting it transmit to the real economy.
Okay, very quickly, Prasanna, out of time on the first segment, though I have more questions. Why are you all going with only a 2% depreciation in the current year? It's a far more riotous year in terms of trade wars. Should we not have at least a depreciation that we had last year, 3%, which means at least 87.5 or 88?
Yeah, you're right, Lata. I think 2 to 3% depreciation on the INR is par for the course normally. But the way we have seen the Reserve Bank protecting the rupee in the past, makes us kind of be cautious in our estimate for the future as well, because we still, while we have seen a little bit of a change in the strategy of RBI in the way they protect INR in the last 15 days to 30 days, we still need to see what happens in a more volatile kind of a scenario. We still need to see what happens to yuan, because that's the joker in the pack. So yes, I would say 2% is a conservative estimate, but we are free to revise the stance as we go forward when we see more action from both China as well as from the governor.
Okay, well, I just want to leave the wrap up this segment with the understanding that, we must first of all stop giving a negative view to the rupee adjusting lower, because that is good for a large part of the domestic economy that's competing, as well as for our exports. On that note, a wrap up on the first segment. There's lots more lined up on Indonomics in terms of how our experts see the current account deficit, exports, and the global headwinds shaping up. Back after the break.